Hello aspirants and welcome again to Legacy IAS Academy. In this lecture, we will be looking at what impact is the GST 2.0 is going to have on the consumers as well as the industries. So of course, GST 2.0 is now in force from 22nd September itself. So what are going to be the impact of it on consumers as well as the industries that we will see? Majorly, if generically we have to understand, there is going to be a lot of positives. However, there are certain issues that still remain. This and much more is what we are going to see over here. So what is the news? The news is about GST 2.0 kicking in. Now what is happening in GST 2.0? So earlier we have the tax rates, the GST rate of 5%, 12%, 18 and 28%. Now these rates have been changed in the sense that 18% has gone and now you have 40% as the sin tax, or you can say the tax on the demerit goods or the sin goods, and at the same time you have only 5% tax which is present on the essential goods and services that are there, and the 18% tax that is now present. So you have only 5% as well as 18% tax. 28 is gone, converted into 40, and 12% is also now out of the way. So the majority of the goods and services will come only under 5 and 18%. The demerit and the sin goods will be in 40%. Now, this is what has happened. Now we are going to see what impact will this cause. Of course, if you are lowering the tax, because when the 18% tax, even though it is still there, a lot of the goods and services which were earlier in the 18% tax bracket have now been shifted to 5% tax bracket. Plus, the goods and services that were there in the 12% tax bracket has now been, a lot of them, majority of them have been shifted in 5% tax bracket, which clearly indicates that the GST on a lot of goods and services has gone down. Now because of that, there are going to be two things. One, it's a rejoice for the consumers, there's no doubt about it, but at the same time the government is estimated to lose around 48,000 crore of revenue in this fiscal's GST collection. Now how will that be compensated plus more is what we are going to see now. Before we move ahead, the important announcement of the new batches that is starting at Legacy IAS Academy, consisting of 40 or less students. So the maximum capacity is just 40 students to pay individual attention to each and every aspirant. You will be taught and mentored by the UPSC, CSE expert faculties. There are some advantages that you will get once you are with Legacy IAS Academy. That is the comprehensive coverage of the syllabus, one-on-one mentorship, as well as doubt clearing sessions with the teachers, faculties that you just saw. There will be regular interactions with them, daily mains, answer writing, as well as of course the test series for both prelims and mains. In addition to this, we have a 360-degree approach for current affairs, wherein the current affairs are covered, the entire week's current affairs are covered through the live classes itself. So if you want to enroll with us, you can simply download the app, log on to the website, or call on these numbers. Now let's continue with the GST. Now this is basically a graphical representation of the changes that has happened in GST. So the goods and services that you see on this line are not having any changes as such. The goods and services that you see at the bottom or below the line is having a fall in the GST tax rate. So you can see milk products and medicine, residential buildings, TVs, even the big screen televisions also, it is classified under aspirational goods. These are now aspirational goods, means a middle class, lower middle class person would also want to have bigger television screens. So it is their aspiration. In that manner, it is an aspirational good. So here, why this symbol is still there, this particular thing is not having a change in the sense that earlier you have varied rates as well. Now, some of the things will still be increased and some of the things will be reduced in the same category. I'll give you an example here. For example, the garments. If you talk about the garments that are going to be costing less than equal to 2,500 rupees are going to be taxed at only 5%. The garments that are costing 2,500 more than 2,500 rupees will be taxed at 18%. As a result of which, some of it will have an increased tax, or some of it will have a reduced tax as well. If you look at the footwear, the packaged and processed food, even beauty services, beauty as well as well-being services have been reduced in tax. If you look at the two-wheelers, the tax has been reduced, but here in two-wheelers also there is a bifurcation, wherein the two-wheelers of less than equal to 350cc are going to be taxed at a lower rate, of course, and the two-wheelers having more than 350cc are going to be taxed at a higher rate. So majority of goods and services that the consumers, the urban rural consumers actually consume have gone down in prices. Now this is the change. Earlier there were multiple slabs. Now the multiple slabs of 5, 12, 18 and 28 have been converted to simply two slabs, that is 5 and 18%, along with, of course, the demerit rate of 40%. So what are the present GST rates? So present GST rates, remember, it's not just 5 and 18, but still why we are saying two broad-based rates, because these are the rates which are going to consist of majority of the goods and services. In addition to that, you have the rate of 0.25, 1.5, 3% as well. Now, if you look at further changes, there are certain exemptions, means certain categories have been exempted from the taxation. So from the GST. So for example, Indian breads. Now in Indian breads, you have roti, you have paratha, parota. You see the IDC ad in which they say paratha, parota, any kind of parathas that are there which are Indian breads, they will have no GST. The health insurance will have no GST. So it's probably good time to get your health insured over here. Then there are certain things in which there is a sharp decline or sharp fall in tax rate, that is the beauty and the wellness product, as well as the aspirational goods, which I gave you an example of: television, air conditioners, etc. These are aspirational goods. Now, what other changes did it seek to implement? Another change was to resolve the classification disputes. For example, in the previous GST rates, there was a lot of confusion in the sense that popcorn, if it is caramelized, it was taxed at a higher rate of 18%, and the salted popcorn was taxed at 5% alone. Now all these disparities have been removed. Popcorn is popcorn, whether it is caramelized or salted popcorn will carry the same GST rate. At the same time, a correction in the inverted duty structures has sort of happened. Now what is inverted duty structure? Inverted duty structure basically means when the raw material is taxed at a higher rate than the finished good, it is known as an inverted duty structure. So this disparity has also been addressed up to 80%. However, this still remains in certain sectors. Now what is the impact it is going to have? More disposable income, means the household will now feel that they have more income because with less money they can purchase more. So this is going to increase the household consumption, which is going to incentivize the investment. When household consumption increases, means what? The demand has increased. When the demand is more, the production side will try to supply more, hence investment will increase, as a result of which the entire consumption is going to go up, which is going to offset the revenue loss. Remember, I told you around 48,000 crore of loss the government will have, but this loss will be compensated with the increased demand, which will give more revenue generation. Now, to monitor this change, presently there is no legal provision. However, the government has said that we will ask for monthly compilation of the data for around 52 different categories of items. This data would be compiled by CBIC, which is under the Ministry of Finance in the Government of India. However, there are certain issues that still persist. That means the inverted duty structure, which was already informed about. Inverted duty structure where the tax on the raw material is higher than the tax on the finished good. That structure still exists for steel and bicycle tractor, for man-made fiber and the textile garment. So steel, which is a raw material for bicycle and tractor, is taxed at a higher rate, 18%, whereas bicycle for example taxed at just 5%. Same is the case with man-made fiber, which is taxed at 18%, but garments under 2,500 is still taxed at a very low rate, that is just 5%, as a result of which inverted duty structure still remains in some sector, which leads to the blockage of the working capital, because the person will have to file for a refund, which will take time. It may be delayed, at times it get rejected, so your money will be stuck with the government. That issue majorly has been resolved, but in some sector it still remains. So probably another slight more transition or change can lead to elimination of these issues as well. Thank you.